Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is a special What's Moving, talking about my favorite time of year. I love Christmas and New Year's, but this is the seasonally bullish time of year for the precious metals. So I want to run through some charts real quick to show you some of the levels that we're watching as we want to position to the long side in precious metals to capture this. Did you know that gold, if you bought gold on December 23rd and you held it through the end of January, you've made money 15 out of the last 17 years? And then silver, if you bought silver on December 20th and you've held it through the middle part of February, you've made money 14 out of the last 15 years. And then for platinum, if you bought platinum on December 23rd and you've held it through the end of January, you've made money 15 out of the last 15 years. These are very high probability trades, and that's what I want to tell you about here today. But a lot of this hinges on the dollar. The dollar has weakened all year long. It's been the sacrificial lamb for the global the recovery of the global economy. And the dollar index is at the lowest level since April 2018. This has allowed gold to set a new record this year. This has allowed silver to trade up near $30. And this has allowed platinum to break a decade-long downtrend. So let's take a look at the dollar index real quick first and jump into the rest. Here's the dollar index. These are some of the levels you need to know. Obviously, we made a new low on Thursday. We're coming off of that. 91.20. This is the 50% retracement from the breakdown point from that November low. And then above here, you got 91.60. This is the 382 retracement. I like 382s because a 382 retracement, if it's in a downtrend, it stays below the 382. And if it's an uptrend, it stays above the 382. So we want to see 91.60 hold. Now, markets can always go retest breakdown points or breakout points in 92 bucks. That's exactly right here where you see. So these are levels to look at. Obviously, the lower it stays, the better it is for the metals complex. Now gold, perfect channel right here. We talked about this channel. We talked about a target of 1915 on the Morning Express. Came into that. You had a high of 1912. That was a place to manage your risk. Now the market's coming back in. 1850, 1860 is going to be a tremendous area to look at. We like positioning long gold, and you can do it in a number of ways. You can define risk with an option spread, call spread. You can also look to customize the size. We love using the micro contracts. We love using and adding into those, building a good position with those. So they're very liquid, 1850, 1860 in gold. Take a look at that. Silver. What's most important, what's been so constructive for silver all year long is it stayed above the breaks at high. I've talked about it many times in many interviews, 21.5, and tremendous groundwork. It's held out above there very well. You dive into the daily chart, now putting silver levels onto the Morning Express. You had the breakout. We talked about this breakout. You can look at it as a big wedge breakout, or just look at this trend line here. We've shot up to $27. If you weren't already long, you could have bought the breakout, but 27 was our next big level. You know where to de-risk. Now we're coming back in. And this is a retest potentially of this trend line breakout, 24.5. 25, though, is our first big support area. It's in the Morning Express. Check it out. Now, platinum. Platinum right here. This is that decade-long downtrend. Going back to 2008. We retested that breakout of that trend line on Monday. 926 was the low. Let's dive into the daily. Now, here's some of the levels to look at for platinum. You got 960 is the 50% retracement. Now that big fallout on Monday, it did hold the 50-day moving average. It held the 618 retracement, held a big area of lows right here through November, and it's been very constructive since. So how are the best ways to be playing it? Well, again, for gold, customize your size. That 10-ounce contract becomes very flexible. Treat gold like an investment. Have it in your portfolio. We could see 2,300 next year in gold. The 10-ounce contract, there's 50-ounce contracts, and there's 100-ounce contracts. One thing that we are extremely good at here at Blue Line Futures is helping you customize the size that fits you the best. If you trade over leverage, you're going to get shaken out. It's just a fact. If you trade too large, you're not going to make it till the end. Give us a call. We are here to help in sizing your position. As for silver, there are 1,000-ounce contracts, the micros. But yesterday, Monday alone, had a $2,000 swing. If you can't stomach that, the option spreads may be better for you. Now, those option spreads, we like the 29.35 call spreads for April. This gets you past that big March expiration. Then these expire at the end of March. And that April 29.35 call spread cost about 65-70 cents here at today's close. We've loved this spread for a while. I've talked about it before. We were initially buying those for 40 cents. We traded out of them on that rally at the end of last week. We traded on that breakout for as much as 85 cents. They traded up over $1 when we were 27. So these things can really boogie. They can move. But you got to be able to really know what you're doing with those option spreads. Our desk is here to help, and we could define it a little tighter, become a little more cost effective for you too. We can help you customize anything for you. And then for platinum, 960 is that level. Listen, we're prepared to see one more washout. The metals are closing on the lows today, here Tuesday. We are going to work orders in front of 960. 965, 970, however aggressive you want to be. We're going to have working orders. That's where we want to be, and see if this thing washes out again. If we don't get a washout, if this thing seems to be holding ground, we're going to move those orders up in platinum. Now, platinum is half the size of gold, the regular size gold contract. Platinum is 50 ounces. The options in platinum are not liquid. You don't want to be using those, but 50 ounces gives you a nice size compared to the gold 100-ounce contract. So platinum, again, you're going to see some volatility. You had about 160, what I think is $160 range there in platinum yesterday. It's about an $8,000 move. So it's a big. It can swing big. I mean, let's see here. 1060 to 920. It was a $140 range. So $7,000 swing. So if you can't stomach that, maybe we'll look at this and stay with the silver. But the more industrial uses in silver and platinum really could help them outpace gold to the upside this year. And give us a call. We are here to help in this very, very bullish seasonally time of year. But always remember, nothing is guaranteed, because futures involve substantial loss of risk and are not suitable for everybody, and you must manage that risk. And that's what we're here to help with. Thanks a lot, and give us a call.